What's up, everyone? It's Eric from Option Edge, and today I'm showing you how to finance a trade in Palantir to basically get a free shot, free long shot, almost like a lottery ticket in Palantir. Not quite like a lottery ticket, but anyway. So Palantir yesterday took a pretty big dive. If you look, this is just the daily. You see the wick. There was a lot of selling to the downside that got bought up. I was lucky enough to get in this trade that I'm about to show you when it was down, and it actually touched the VWAP here, which I'm always amazed. It seems like VWAP really is a strong technical indicator to use. So every day I try and learn more about VWAPs because they are pretty cool. Anyway, so I was thinking, how do I get long this stock with using an option strategy with where I can't lose, more or less I cannot lose, okay? So the idea is this. I'm looking at the 30 level. I think once we break above 27, we might have some room to the upside. So I want to buy a 30 30 strike call with January 21st, 2022 expiry, okay? So let's go over to see what that looks like. So I already have that here. So it's a 30 strike call. Let's look at the delta on that. It's right about, that's a put. So let me switch over to calls. So as you can see, the delta is about close to 40, okay? A little bit closer to 37, a little bit outside of 40. So let's look at our break even here, okay? So our break even is going to be the 30 strike plus the credit we pay, or plus the debit we paid. So it's going to be 31.67, okay? Obviously when you have a long call, you have unlimited capability of having unlimited gains, okay? But sometimes you got to ask yourself how high. I mean, a stock could you could see what we saw in Tesla. Let's look at Tesla last year. I mean, if you had a long call on Tesla in November and just let that ride up, you'd be worth a lot of money, right? But that doesn't happen too often. Okay, that's more of a lottery type thing. So in the next couple months, the question is, can we run up to 30? And it's not only it has to run up above 31, almost 32 at expiry to be in the money, right? So let's see how we can do better than just that simple call. And I talked about this in one of my latest videos. We're going to go out and sell against this call, the 20 delta 35 strike call. Okay, so remember this is what our break even is. Let's sell that. Okay, now our break even is lower. Okay, it's going to be $30.87. We've loaded by 80 cents. Okay, we've capped our max profit, but that's okay. We're okay because we've reduced the risk tremendously. So what's next? Okay, so this is going to be 87 cents, right? So that's still 87 cents to make 400. That's not bad. That's almost 5x. We could potentially make 5x here if we go all the way 35 and above. I'm not saying that's going to happen, but you never know. So can we do anything to further reduce our break-even point and even maybe reduce our theta decay as well? And there is. So this is what I'm thinking about doing, or that I've done. So the 26 strike, we were at 25 yesterday and actually sold the 26 put. Okay, so we're going to sell a put. So when we sell a put, when you sell a put, think of this as this is a credit. Okay, so we go from 87 cents is the debit. Okay, it's a net debit. This is a credit. So what's going to happen is when we sell this all together, this total strategy is going to be a net credit. Okay, so boom. So now see that changed to total credit. So now we will have theta decay will be on our side. Okay, this will have positive theta, and so this means this can sit the whole, what is it, 4 months from now, or more? Yeah, about 4 months from now. This can sit that total duration, and as long as it's we're going to make money on this thing, okay? And we only lose money technically if it falls below the 26 strike. We would lose the debit, but that's okay. That's okay. We would lose the debit that for the 35 call spread, right? But what's going to happen is we would get put 100 shares with a cost basis of $26 a share minus that credit. Okay, so technically we can only lose money once we get below that $24.08 mark there. But just because so what's going to happen is we're going to get put 100 shares of stock. So at that point, I'm okay with having 100 shares of Palantir with an average cost basis of $26 per share minus the credit received, which was $1.92. So our cost basis is going to be about $24 or so. So worst comes to worst, we own 100 shares of Palantir at $24. Now, if we go back to the graph here, $24 is not bad if you look at, compared to where we've been in the last 18 months. Okay. I'm okay with that. And then what we can do after that is, if you want to, you can then run the wheel strategy. So let's say we get assigned, we get put 100 shares, then we could run the wheel strategy by selling a 30 strike call 30 days out. So this is just a little bit, there's just some cool, interesting ways to finagle the numbers around, finagle the different contracts around and the expiries to see how we can set up a way to benefit without much downside. So we, at the most, we can make almost $700 here. So this is what I'm looking at, and let's go. I'm gonna go over a Tasty Trade and show you how this looks when we build it out leg by leg, and look at how the theta and the probability and all that where it looks. So let's go over to. So here is the 30 delta call here. Okay, so let's go ahead and open this up. So probability of profit 23. This shows us another thing. The IV rank is very low, so. Well, since we're selling a put, this is sort of a risk reversal, selling a put and buying a call, sort of Vega neutral. But you can see our theta, we're losing a penny every day if everything's equal. And yeah, you get that. So let's go ahead and exit that out. We are now going to add another call here. Let me pause this and I'll show you what. All right, now we're going to be selling the 35 call against the 30 call, okay? So our probability of profit has gone up. I think last time it was 23%. Now it's 26%, okay? We've lowered our theta decay from a penny a day to just a fraction, a quarter of a penny a day. So that's a lot better. We've reduced our price, blah, blah, blah. So I've showed you this. So now let us go and to the option chain and see what happens when we introduce the put that we're going to sell. Okay, so now let's check it out. So things get funky when you have 3 legs like this, so it can't do a good job of all the other stuff. But so here we go. Our theta decay, which was negative before, is now positive. Okay, so we're going to make almost a penny a day. Okay. And our delta, our directional exposure is pretty high, but the thing is, if we ever get put stock, that's okay with us. So in a way, we can't lose with this. That's how I look at this. Can't lose. And they show here's the max loss. If the price of Palantir winds up being less than 24.07, your maximum possible losses is this. It's really, if it goes to 0, that's what our max loss would be. But I don't think Palantir is going to 0 anytime soon. So so that's the idea, the trade idea. If you like it, let me know. Anyway, hope you guys enjoy that. As always, like and subscribe, and give me a follow on Twitter if you can. And this is an advice. It's just for educational purposes only. All righty, bye.